Welcome, listeners and viewers. So excited for this first episode and first season of what I hope will be a continuous series of the podcast Policy for Normal People. I'm your host, Christy Amada of Amada Development Services, LLC. I'm an independent consultant in marketing, communications, and fundraising, helping businesses and nonprofits raise awareness of their brands and raise revenue. You can check me out at my website, AmadaDevServices.com. The purpose of Policy for Normal People podcast, however, is sort of a experiment long time in coming for me. I have since youth been interested in everything from foreign affairs, policy issues at every level of government, and really just a curious observer, as I'm sure many of you are. I am launching this podcast not to be the expert as much as to invite experts on to talk about policy and help me break down and understand the complexities and the intersection between policy and how it impacts you and me, everyday regular Americans, at the ground level, at ground zero of our lives, at our kitchen tables, with our families, and our quality of life. One thing that this podcast will not be is about politics. I have no interest in talking about politics. There's plenty of that going on right now and continuously will. What I'm interested in is talking about policy once it is in fact law or in place in a way that is truly going to impact our lives for better or worse, without all of the political side notes. So, without further ado, I'd like to introduce, and I'm super excited that you're here, Marcus Sturdivant of Indian Head, North Carolina. Marcus is a independent business owner as well. He's the founder of ABC Squared. He's a financial advisor and teaches financial literacy to folks. And Marcus, I'm going to turn this over to you to introduce yourself, but I gotta say first, I was just so excited to see your tagline. I came across your amazing profile on LinkedIn. Folks, definitely check out Marcus and his financial services, what he offers at ABC Squared. His tagline is helping Main Street meet Wall Street. And when you think about what I just said about policy for normal people, and that normal meaning, you and me, the everyday American, just trying to go about our lives, trying to make sense of all the things that are going on where policy and legislation is concerned, but still trying to, get our kids off to school and get to work and so forth. Marcus, tell us about yourself. Tell us about ABC Squared, and especially what that tagline means to you as part of your mission.
All right. Hey, first of all, thanks, Christy, for having me on. Very excited to be on
You got it.
Policy for Normal People. Very excited. Yeah, so the ABC Squared is a financial planning firm that I run RIA down here in Indian Trail, North Carolina. Um, the tagline Main Street meets Wall Street is just it's just something that I really am passionate about, helping people understand what can be complex ideas in a simple way. It seems as if maybe Wall Street has had the advantage, I guess, for a long time. They had the information, but now information has been disseminated in such a way that anyone can access market information, financial information. We have uh, the internet where anything's available instantly. So that really lowers once it's proven that once information is available to people, it lowers the standard where people can learn. So with that being said, there's a lot of information out there that may not be the best. It may not be the soundest. So I'm just out here trying to help people who don't understand, kind of like you said, normal people understand complex things in a simple way. So Main Street meets Wall Street.
Appreciate that, Marcus. And that is so in alignment with policy for normal people. Just trying to make sense of a very complex world. And it's interesting what you say about the additional access to information that we have. You and I have talked offline about how we grew up and how information access has changed so much since we were kids. Um, for good or bad, though, sometimes there's information overload and the complexity of all of it is still just as complex as ever, if not more so, because you're trying to sift through what's misinformation, what's true, what's false. And to some extent, that's always been the case. But access doesn't always necessarily mean acquisition of true knowledge or the understanding of what's going on. So, without further ado, I am excited to get into the topic. It's a complex topic. The for better or worse, named Big Beautiful Bill. As we know, President Trump signed the bill into law on Friday. And so, what I'd like to do is give us a scenario, Marcus, and just sort of have a casual conversation about, based on that scenario that I start us off with, what are some things that you see in terms of policy impact from the Big Beautiful Bill? So let's say, for example, a kind of quintessential American family of four. You have a dad and mom, maybe mid 40s, two minor children that are, elementary, middle school, somewhere in there. This is a family that maybe makes about 200,000 a year gross salary between the two. Dad is a small business startup consultant, a lot like myself. Let's just use that. And mom is, let's say, a school teacher. I was a school teacher for 20 some years in my origin state of West Virginia, so I have some feeling and understanding of what that profession has, both in terms of good and bad, in raising a family, income, and so forth. Um, so you're talking about a family that has, state insurance, likely through mom, because state insurance, for the most part, has been traditionally pretty good for teachers in most states. But again, this is a broad overview. This is going to be a family that has, like so many, a home mortgage, um, and possibly lives in one of the, we'll say, average lower middle to low income states that went red in the 2020 election. So there's about nine of those. Again, we're not getting into politics, but I want to mention it in that context simply because there are going to be a significant amount of families in states like this that are going to be affected by all sorts of provisions in the bill, some of whom are probably going to fall through some cracks. They're going to qualify for some things they're not, some are going to phase out. So kind of want to get into that. Um, so with that sort of scenario, and I know it's kind of a general broad category, and we'll tweak it along the way. But a family like that, let's take for instance the 2017 job and tax cut permanence that have been now put in the bill that has been made permanent. Um, what do you say about that in terms of how this is going to be beneficial or not to a family like I just described?
Got you. So yeah, that's a lot to unpack.
Yeah, so pick and choose what you want to talk about.
But that actually, that affects way more Americans than people realize. People usually think of the ultra rich or the quote unquote poor or poverty stricken. Uh, and $200,000 for a family of four, you're not really in either class.
Yeah.
So you're kind of in the middle, a sandwich type situation where with this particular bill, you're not poor enough, quote unquote, to reap some of the tax credits, but you're not rich enough to get some of the tax deductions. So in that situation, um, a family like this, they will see that the tax cuts have been extended, so their income tax will obviously be lower, keeping their lower federal income tax bracket. The child care credit was increased a little bit. I think it
Mhm.
went from like 2,000.
2,200, yeah.
So
Mhm. Yeah.
10% there. The salt cap, I don't know how the salt cap will affect this family as far as that tends to affect people with property, like extra property. So
Hmm.
they only have one home and they're in that tax bracket, maybe not. But if they were earning higher, maybe 400,000, 500,000, has several properties, that's where that higher limit in the salt tax could help as well. As far as, being a business owner for um, the husband in the situation, this the Tax Cut and Job Act from 2017, which was codified and extended, does provide some benefits there, as far as helping with qualified business income, things
Hmm.
that type of credits and deductions. So it's just a lot of things in there. As far as with planning for children, they're actually, if they already have two little children and one wasn't born in this year or the next year, they're going to miss out on the Trump baby accounts.
Hmm.
So, and if they are not planning on having any more children, they're going to miss that benefit. So there's just a lot of different things that they're tied up in with this particular tax bracket.
Yeah, yeah. And you mentioned a couple of key things there, and I'll just kind of bounce around to a few. As I said in the beginning, we don't have any intention of being able to cover the whole thing, but just wanted to, hit on a few highlights. So the baby credit, it's $1,000, and my understanding is that parents can contribute as well, right? They can contribute up to 2,500 a year, I think it is, maybe, something like that. And apparently there's other stipulations, so the child can use that. It's going to be put into a savings account. Have you come across any specifics of how that's all going to be frameworked or structured? Is it going to be um, just a direct deposit from the government that you then have to show proof that you've set it up as a savings account?
Uh, yeah, so I think the government will set up the accounts. You have to go through maybe a portal of some sort. I don't know if they've worked out those actual details, but the account itself will be structured where newborn children, like I said, from this year and moving forward, will have $1,000 deposited into a savings account for them at a pre-tax basis. This money grows tax deferred until they reach, I think they have an opportunity to take it out at 18, where they can take a certain amount of money out with a penalty. No, it's not a penalty, but it won't be the same amount of money as if they let it grow. I think they can let it grow to like 25 or 35 after that.
Yeah.
They can use it for certain things like buying a home. So that would be a good investment, if home buying is something that they're looking for. That seems to be a
I think
pressure.
it's first time home buyers, right? Yeah. So young folks. Yeah, my daughter just she and her husband are a young couple like that. They just bought their home, and so, it'd probably be had this happened back, when they were babies, so, it would have been good for them for that. Yeah, and I think age 30, I think, is it that they can convert it into a Roth account if they have not withdrawn beforehand, is my
Gotcha. Yeah. And then at that point, you will have to pay taxes on it. So that's one of the things that I kind of wonder about with the bill is why is this a pre-tax account if they're using our tax dollars to pay for it? Shouldn't that already be after tax money? But that's probably in the plumbing size because it's really kind of like a large loan to the government itself. Once these accounts become, uh, once you cash in these accounts, then you have to pay your taxes on them. But having Americans set up with savings accounts so they can grow, and that's a very good thing. The ins and outs of whether it's more beneficial to this group or that group. That's in the details. One thing I would like to point out is that it's been interesting to see that this account, because there are a lot of Americans who don't have children, or Americans like us who don't have little children anymore. So we're
Right.
essentially going to pay for this, whereas people were in uproars about student loans.
Mm.
So because people who didn't go to college didn't feel it was fair to pay back student loans for everyone. So it's just
Right.
we'll see
Yeah.
how that plays out in the long
Point.
run.
Yeah, a good point. And then correct me if I'm wrong, but I thought I saw where, this baby credit, this $1,000 is only going to be till 2028. So is this some kind of game that's being played with, the expiration dates, which we know happens a lot, and that's a very bipartisan game that gets played. I'm not, again, no politics, but 2028, I think, is the so that's a small window, 2025 to 2028, and is it even smaller than that? Like, does it actually start in 2026? That I'm not sure.
Yeah, I think all the things in this bill go into effect next year.
Yeah.
So pretty much. Um, yeah, it's definitely with the thing with the tax deduction that you have going on there versus the tax credit that
Hmm.
you will receive in that situation. So it's just it's all tied up in the details.
Yeah. And if you had like this same family, for instance, that lived in, say, a much higher cost state, California, New York, something like that, you referred to the salt tax. I mean, what kind of issues do you see there? They're increasing it to 40,000, I believe, from 10. So significant increase. Um, was that some kind of compromise that you think is beneficial, or is it still have some risks that we're not seeing right off?
We can find ways to save taxpayers dollars without increasing the deficit. That's always a benefit, in my opinion. One thing to point out, as you were stating earlier with the child's accounts, a lot of these tax deductions actually expire in 2028, but the tax credits are made permanent. So
Mm,
the deductions favor lower income families, while the credits tend to favor like the upper 1%.
okay.
Just another interesting juxtaposition there. Like a lot of things we're talking about will fade out from in 2028 unless they're are codified in the law again.
Yeah. And so, and I'm also thinking, about the so what is seems like out of the gate, it's a win for a lot of people, more money in your pocket in the short term, but you can expect in a very short time, because a year goes by pretty quick, a couple years goes by very quick, um, it looks like it's only going to skew towards the upper class in terms of income benefits from the continuations of both the 2017 job and tax cut, and then also just the way you described the credits and deductions are working, right?
hmm Yeah, and another thing to look at with this type of bill, it was pay me now, pay me later, either or type situation when they use the reconciliation process.
Hmm.
We're comparing a bill to compare the cost of a bill versus the cost of if the government actually did nothing, right? So immediately once you reinstate if you lost the tax credits from the Tax Cut Job Act of 2017, that would be a huge boom to uh, well, actually, it'll be a huge loss of income to Americans. Huge
Mm.
boom for the government and tax dollars revenues received. So just another thing to
Mm.
pay attention to.
Yeah. So about student loans, I was a little confused in some of the things I was reading about forgiveness. It says that what I was reading was that forgiving loans that starting in 2026, any loans that had been forgiven, but I didn't see where it had like a range or a time frame on that, or if they're just talking about during the last administration or when. But regardless, that was going to be taxable income at some point after 2026. So. Um, that could be a significant, it seems to me like that could be a significant setback for young people who are trying to get a higher education. What's your thought on that?
Exactly. And as you said, with the student loans and the whole process, this administration, this has been a complete juxtapost to the last one with the student loan forgiveness. I honestly don't expect any type of student loan forgiveness to really continue to grow. If anything, they're going to continue to pull those back, rein those back. I mean, the Supreme Court said that they were unconstitutional, so they had the
Yeah.
judiciary say that. So I think it's going to be tougher to borrow money to go to school unless you're borrowing it from private institutions. And if this becomes taxable income, and with the government's push to help Americans go back to trade schools and seek out vocational jobs where you're earning six figures and can make a comfortable living in America,
Hmm.
it works. Whereas you wouldn't need necessarily high student loans to go out to expensive four-year university. So the whole process is shifting. But yes, if your student loans become like taxable income, that would be really hurtful to the people. A lot of Americans have student loans averaging, I think, around 40 to $50,000. So
Yeah, that's probably the average, and it certainly gets higher when you get into more professional degrees, medicine, law, that kind of thing, engineering. Yeah, that's interesting. Uh, I kind of have a general concern about as much as we heard all this talk about cutting government waste, and I think in a general sense, everybody would agree that government comes with its bureaucracy by nature, at all levels, and there's always room for a good old fashioned audit, and if it's objective, and trying to clear out any kind of inconsistencies. I think about Medicaid. Um, I'll be honest. I have known people, nice people, but people who nonetheless have the ability to work in some type of job, but are still getting assistance. And then I've known others who have continually reapplied, been denied, and don't, and are in far worse shape physically, mentally, or what have you, and unable to do most jobs. So I would say that I've observed some unfairness in the system and some inconsistencies that, whether they're intentional or not, probably not. They happen anyway, probably, in the way that things are administered. But I'm not real confident, and I wonder what you think, we talk about what the cost of all this is going to be. There's going to be some costs involved in additional bureaucracy to administer, like, for instance, the work requirements, right, for Medicaid. So, as we make cuts, there's also going to be costs. And of course, we know that the overall concern is a $2 to $3 trillion deficit, if not more, I think, from just the extension of, I think, the job and tax cuts alone, and the permanency of that, and then additional expenses on top of that. So I'm just kind of curious what you think about the trade-offs in how we're looking at cuts, and that's getting framed in one way or another as a benefit to people, as money going back into your pocket, and it's even framed in some circles as more efficiency. But is it more efficient? What do you think? Is it going to be less costly?
So we can even go from the example we were just at with the student loans, right? There was a point not too long ago where we were cutting out people in the student loan department, and people were applying for student loan forgiveness or student loan pauses, but the system was so backed up that they couldn't even get their applications through. So
Mm.
that's one example of how those things are happening, right? Where you're cutting efficiencies in one way. It's like you're taking a little bit with this hand, but you're giving a lot more with the other hand. Just pull it from there and take it to the other side. As far as just the actual way that Medicaid is, so the Medicaid is going to be cut, right? It's cut going out to rural areas. I'm down here in North Carolina. Senator Tillis fell on a sword over. He's retiring from the Senate over what the people down here in North Carolina are going to face, because we're going to be hit the hardest, some of the hardest in the country, just with the phase out. People talk about people losing coverage, which is a terrible thing. But say the family of 200 with $200,000, right? They don't have Medicaid. They're not going to lose coverage. But
Mhm.
when the other people in the community start to lose coverage, and the community in general starts to get sicker, it's going to cost more for them when they go to the doctor, or it's going to cost more for them when they go to the doctor in general, just because they have to pay more premiums to cover for the people who aren't paying for the premiums. It's also going to be so these costs are going to be pushed down. The federal government are eliminating them, just kind of pushing them down to the states. So if the states have to absorb some of these costs, they only have so much of a budget. So that part is also going to affect cuts for other areas inside of the state, right? So
Yeah.
it's like six here, half a dozen there.
Yeah, I'm glad you brought that up, Marcus. I find the whole discussion about what is the cuts are ultimately going to be, and who's going to be affected, both in terms of access to health care, Medicaid, but general healthcare services, the cost of that, the cost of insurance premiums for even private insurance, that sort of thing. And when you think about provider taxes, right? I know one of the arguments that Tillis and others had was how that was going to possibly affect the state of North Carolina and other states that were in similar situations. Um, I almost feel like it's a no-win situation for the taxpayer, regardless, the premium payer, because But feel free to push back or add something to that. But you've got this what seems like this situation of, and I know even President Biden had called it a scam. The provider tax thing, where you tax a hospital, the state rather taxes the hospital, then they collect that money, send it back right back to the hospitals, and claim it as state payments towards the program, towards Medicaid, so that they can submit to the federal government for the federal government's share and match, when in reality it was the same money. So I guess the broader concern is the state that has that in place. And I know North Carolina, I think, has the trigger law, right, where it's going to eliminate the law for Medicaid provisions altogether if the state can't utilize, I think it was like at 6%, that provider tax, and it's not gone in the bill, as I understand it. It's just lowered. So that's a whole other issue. But the provider tax issue, what is your feeling about um, who's who's going to get caught in the middle of that? There seems to be a game going on, perhaps, if that's the right word to use. I'm not assuming that, but it seems kind of fishy to me. You tax a hospital, you collect the tax, then you give it back, and you say, well, this is the state giving money to match the federal funds that they would then get at that same rate. What do you think about all of that conversation?
Yeah, I think there's a lot going on and all that. I mean, like you said, so for something to be taxed or to be a tax deduction, you have to have actual income. You have to have income of some sort to actually have a tax deduction or a tax credit against it, right? So what you're saying is with this trigger is that they're just going to take the money that they already have, so income, and then they're going to use it as a credit, and they're going to send it back as more income, and then at the time somehow get switched back again as a credit. It's just a lot of paperwork. It's going to get pushed out once again, more so to that $200,000 family, right? Because
Mhm.
they're not reaping the benefits of any of this. The healthcare providers are going to raise their premiums because they're paying for healthcare. That family needs healthcare. Your small business owner, his wife, state pensions, as we speak about, you said his wife has a state pension fund. Some things that may be hurt in these cuts may be pension funds as they try to make up for these um, this expanded stress on the state government to cover certain areas in healthcare costs.
Mhm.
The reasons they give you tax credits or tax benefits are they think that it's an overall benefit to the uh, good of the people, right? So if people have health care, less people will be sick. There'll be less of a burden on the government to take care of sick people when they get older, right?
Yeah.
Lower Medicare, Medicaid costs. So that kind of played into the tax credits that people will get in that position. But it just seems like a lot of onus is being shifted right back to the um, states. And if you dove into any government agency, especially healthcare, because I mean these some of these providers were just sending back whatever bills and the states were immediately paying. Like no one's like going back and looking at it. There's a
Yeah.
lot to find in there. They needed to doge just to doge the healthcare part.
Yeah.
Like
Yeah. Right. Yeah. Well, yeah, it's kind of a perfect storm in a way of the inability, especially right now, to kind of see past the fog and smoke of what all has actually happened. And I'm sure that down the road we'll even consider what we've talked about here, and it'll look a little different. But I think at the end of the day we're in kind of saying the same thing, that whether or not the state, any state, not just North Carolina, is playing some sort of game with the federal government to, match funds that weren't really newly collected funds in the first place. That's one thing, but it seems to me that even in doing that, it would have already caused premiums to go up for the patient on their end, especially those with private insurance. And I don't see how this bill fixes that. And it doesn't eliminate provider tax payments, it just reduces them. So you're right about it puts more pressure on the states, but um, to increase their portion, I guess, in paying for Medicaid. Um, but you kind of had a strange situation in the first place where, as I said, it seemed like a bipartisan complaint that there was a scam going on there with, states claiming to provide a match that they weren't really providing, that it was sort of just shifting money around in accounts for a little bit and calling it one thing now, calling it something else later. Um, I know it was reduced, like I say, to I think about 3% in the bill that just passed, and I'm kind of wondering, well, if they were concerned about having that provider tax at all, why did they still keep at least 3%? Aren't the states, even though they may be matching at a lower rate, there's still going to be a match there. I think that's good. I mean, that means that there'll be some federal money available, but it'll be definitely be less. So it's all very convoluted in the way that the money is getting passed around and who's getting it. But I feel like the taxpayer always, who's paying the premium especially, is kind of the loser in either of those scenarios, just to different degrees, perhaps. I don't know if you have any more thoughts on that, but I don't see it solving anything.
Right. And I don't even think like the way they went into the initiative with some of the things they said they want to do. So I think the limit you're talking about, I believe it's like 50 billion in that fund somewhere for Medicaid, Medicare, state, the provider tax. And I think so when this was proposed, it was to eliminate, like you said, work requirements, people who probably don't need Medicaid, Medicare, and they're out here getting full benefits when they could possibly be out earning. I don't know everyone's situation. So,
Mhm.
but you know people, like you said, who actually need it, and they
Yeah,
can't
they
because
can't get it. Yeah.
process is so cumbersome. Ties back to your point before, where there's if you're cutting the workforce because you're reducing that area by the federal government, then these people are also struggling to get through the system just to get seen and helped.
Exactly, exactly. It's clogged either way, whether you're truly eligible or not. I completely agree. And it just seems to me that there were issues of efficiency and fraud, intentional or not before, that aren't being fixed with this situation, with this bill. It's just a matter of cutting without correcting, perhaps. Um, so Um, I want to keep us on time here. I know you and I talked that we're going to do these episodes in 45-minute intervals, and we wouldn't cover everything, all at the same time. Um, but what else, Marcus, would you like to touch on that we haven't today? And I'm going to share with our listeners and viewers that, as I just said, I think we would love to have Marcus back if he's willing to join me again, and we'll hit some other specifics about the bill and how it affects maybe seniors, specific scenarios with people who maybe have severely disabled family members that they're taking care of. I have friends who, have children even that are going to need assistance for the rest of their lives just because of unfortunate circumstances that they were born with and medical conditions, very expensive medications, you name it. And I know that we bounce around, talked a lot about a lot of things here, kind of using our broad scenario of the four-person family. Um, but is there anything else that you'd like to touch on to kind of wrap up today, Marcus?
Well, first of all, thanks for having me on. And yeah, of course, I would love to be back on.
Absolutely.
We'll go deeper into the subjects and different subjects. Just thinking more with this family that we were talking about earlier. I mean, they're going to, they're too wealthy for most credits and too poor for the deductions. And the reason why that matters is because credits actually like reduce your dollar for dollar income at the top line, right? So that's
Okay.
$1,000, and $1,000 is the same whether you're in the 10% tax bracket or whether you're in the 37% tax bracket. Whereas the deduction is that's going to affect your income after that in the tax rate. So if you're the same $1,000, if you're in the 10% tax bracket, that's $100. Whereas if you're in the 37% tax bracket, that would be like $370, right? So,
Yeah.
but the actual top line credit is more important for your income. So
Mm.
just pointing that out. And then there are a lot of people who just are in this small business owner, teacher's family of two. I mean, they just they can't get the full benefits either way that it goes. There's nothing new in there to help them with their child care, really, like subsidies of that sort. There's not really many expansions for the healthcare, if anything is contracting. So it's It's nothing really to help them with inflation as far as some of these.
Yeah, we didn't even get into that. The
None of them,
inflation,
yeah,
tariffs.
right. Few of them actually are tagged to inflation, so they don't actually increase. They actually phase out, especially for people in this income level. So
Mm.
just, yeah, we'll have to talk about the deficit next time because this increases the deficit. Those kids we're talking about, if it's, I guess, depending on which side of the CBO scoring you're on, one side says that tariffs will pay for this, along with the uh, structuring of globalized trade, and will actually earn money in the next 10 years, whereas the way it was scored is going to increase the deficit from the CBO. So these kids that we're talking about now, let's say they're 3 and 5, they'll be seeing the reaping the benefits of this in 10 years.
Yeah. And, to your point, and kind of to also wrap up, I mean, I just saw today where President Trump is still going back and forth about what tariff is going to land where. There's several countries, South Korea, Japan, Myanmar, and so forth, anywhere between 20% to 40% again. And, it's sort of this, um, you know, make an offer, pull it back, make another offer, pull it back again. It's a very yo-yo scenario, and I know that that makes investors incredibly nervous. So that's been going on now for, since the beginning of his term this time. So yeah, let's definitely plan on focusing on that a little bit more specifically next time. And we'll start with this scenario and tweak it a little bit and change who some of our people are. I know that listeners are probably wanting to know a little bit more, for instance, about what all this might mean for seniors. Who are already in retirement or edging towards retirement or something. And I'm sure you do too, Marcus, but I know a lot of seniors who still work a part-time job even though they're quote unquote retired, but just need some extra income to maybe pay for medicine if nothing else. So, as we see cuts to medical research, we see cuts, to you know, hospitals and things. I mean, it's all of these things are kind of coming together, as I said, as a potential perfect storm. Thank you so much for being with me today. It was great to get your perspective, and I look forward to having you on next time as well. Let's continue this conversation, and as we said, we'll get into a little bit more about the deficit and tariffs. But I think it was a great start. I know I learned a few things, and to our listeners and viewers, please contact us. You can contact me directly in email at amadadevservices@gmail.com. I also have a Substack called The Narrative Effect at christyamada.substack.com. You can feel free to listen to the podcast again there and subsequent episodes and leave comments. I will open it for comments this time and next. And Marcus, is there any particular place that folks can reach out to you?
Yeah, they can find me on LinkedIn, Marcus Sturdivant Senior on LinkedIn. They can check out my company's website, theabcsquared.com. You can always just email me if they like. Uh,
Okay.
Emails on the website, or they can reach out to you, Christy. You can tell them how to find me as well.
Absolutely. I will do that, Marcus. Thank you so much. Have a great evening and look forward to the next episode. Talk to you soon.
Thanks, Christy. Thanks for having me on. Really enjoyed it.
You too. Take care now. Bye bye.
Bye bye.